Hello everyone and welcome to today's Stocks and Crypto YouTube Charts video. I am No FOMO Charts. Today is Sunday, November 2nd, 2025. It's after 9 o'clock p.m. Eastern Standard Time. Welcome everyone. This is a swing trading and investing YouTube Charts video. Let's start with the weekly watch list. We'll go to stocks and then end with crypto. This upcoming week, we have earnings from Palantir, Pfizer, AMD, and McDonald's, Robinhood, Qualcomm, D-Wave Quantum, and Open Door Technologies. Economic data, we have unemployment claims, average hourly earnings, core PCE price index, and non-farm employment change. Recent news, President Trump and the USA signed APEC trade deals with China, South Korea, Malaysia, and Cambodia. USA agrees to temporary de-escalation of some tariffs with China for now. Tech sector earnings were mixed and corporate worker layoffs are still scheduled. USA FOMC, Federal Reserve, cut interest rates by 25 basis points this month. However, the December rate cut is still to be determined by the data. Chart events, SPY S&P 500 prices falling last Friday, retesting 12 EMA zone after rejecting down from record highs and earnings reports from last week. Bitcoin, the price is retesting the 200-day moving average zone, which is 109,000 all the way down to 106,000. And some major altcoins printed moving average death crosses on their respective daily charts. That's the 50 EMA crossing below the 200 EMA on daily charts. For example, Dogecoin, Cardano, AVAX, and Litecoin. Let's start off with SPY. SPY. On a weekly chart, the S&P 500 ETF printed a shooting star, which has not happened for some time. The last shooting star was June, so let's see if we're going to pull back. There's going to be some volatility from earnings, but we're still in the uptrend, not because the EMA say so, but because the price is making higher highs and higher lows. So until we have a broad flattening of the price consolidation on a weekly or a monthly, which either is not happening right now, but once we have this type of price action, meaning going sideways, then we might see the crash come. Because people are always thinking and saying there's going to be a crash. AI, these stocks are so high valued, the earnings are starting to see some cracks. But it takes some time for that to happen because investors know to not get too scared from any one data point or news unless it's extreme. Last winter, it took about 126 days, so about 4 months, maybe 1 to 2 quarters approximately, to see some kind of slowdown before we have a major crash, unless there's an extreme emergency news and event, global catastrophe. Hopefully that does not happen. So until then, it's really data dependent and earnings dependent for stocks, still in the uptrend. However, for support to the downside, for the support numbers, we can see support fill this gap zone, which is about 677 to 672 on the downside, and the resistance gap zone of 687 to about 690. In other words, plus or minus 1% for the index. Once we start downtrending, that will be our cue and our clue that there's a problem in the market. We're still uptrending in this price, which is why at the current moment, I'm not afraid of the chart. Let's go to Nasdaq. Nasdaq has a very similar mindset. We're still on this daily chart in the uptrend. However, some individual names, which we'll go over a little bit later in Magnificent Seven, are having some sell-off problems. People taking off their profit, selling some right now. We have this weekly shooting star on the Nasdaq ETF. If this turns into an evening star, that could be a much more serious pullback, but we're still in the uptrend just like SPY. We're not consolidating yet for 6 months, and the trend is still up. So The only thing maybe I could warn people about is on a weekly, we did poke out of this upper Bollinger Band linear regression on both. Only on QQQ, on Nasdaq, excuse me. So just QQQ. That's why tech is selling off algorithmically as well. Potential gap fill down to 620. We'll see if that comes true or not. Still in the uptrend. Let's see what happens this month. Now, Dow Jones, you can see once we hit that upper wick, we're starting to consolidate back down into the reversion to the mean of the linear regression, this blue, purple, blue line indicator. And that support is around 473. Once we have a extreme Bollinger Band crash, whenever that happens, that's usually the dip buy zone for me. So that's why I was bullish on this last leg up in October. And even I would take some profit. I did not buy DIA, I bought other stocks, but the mentality is around the same timing. Weekly chart, we can see we poked out of that Bollinger Band and the robots, the algos, are going to sell some, take their profit. It's very similar what's happening right now. Maybe the index that's having the most problem right now for USA are the small caps. We can see on the daily chart, we are consolidating in that price in the white line. Rejecting down below 250 on this top resistance area, support around 243. So this is an example of uptrend turning into a consolidation going sideways, getting sandwiched between 250 and 243, still in the uptrend, but I would not be surprised if we have some profit taking and pull back on small caps because small caps got a little bit too excited, poked out that Bollinger Band, having 2 days of consolidation to the side. It is not over, however. We learned from COVID pandemic that once we have an extreme crash and then a subsequent rally, we could just pull back and then for 1 or 2 years keep rallying on certain stocks, not on all stocks. Let's move to some Magnificent Seven stocks. Number one stock, NVIDIA. Very quickly, NVIDIA earnings is on Wednesday, November 19, about 17 days now from the making of this video. We're still on the uptrend. However, weekly, we got a little bit excited off of that conference, news and information. We're stuck right now below 210, 205, 200 area. And so in the uptrend right now, pulling back, there is a bit of weekly bearish divergence that is starting to build. Price making higher high, RSI making lower low, but usually it has to get to an extreme. So perhaps if NVIDIA gaps up all the way up to 250 or 300, then we might get that final leg up and then a larger pullback down. But for now, in the daily chart, we're still in that golden up cross, and we can see we poked out of that upper linear regression and hesitating on tech right now. Because tech sector, some of the earnings are mixed. That's what I mean. Apple, very similar. We're still in the golden cross uptrend. That printed on August 20. I told people about that on this video, on this YouTube channel, that we have a golden cross, and that signals a potential for a rally. And that's exactly what happened. People were disappointed about AI, Siri AI, for the past 1 year. That, I don't want to comment too much about it. The news commented everything about it, with all the good and bad about it. For me, it's just once we started to have some of these oversold setups down here, start to get some momentum, even on a weekly chart got momentum, and broke to the upside. Finally, Apple was up 30%. Now, Apple reporting earnings, they reported earnings last week. Mixed earnings. Amazon had stronger earnings, but if we look to support to downside 264, and unless we break 277, we're still making a higher high in the price. So if we make a higher low, that's totally fine. Normal price action, high, low, high, low, high. Next higher low must be above 250 to 260. And then see if we can make survive earnings, pull back, and then try to continue, hopefully. Next, let's go to, let's just do Microsoft. So Microsoft earnings were also mixed. I do want to point out Microsoft, though, on a weekly chart, we do have a potential double top. So this is a little bit more problematic than other companies. Like NVIDIA does not have a double top right now. Microsoft does. That's why I'm a little bit more bearish on Microsoft, just because they had this nonstop rally for 200 days. So if we pull back to 510 or 500 or 490, then that's actually normal for the stock. Realistically, however, we're probably going to pull back to that trend line and really fight. I'll put an arrow here. Really going to fight in this zone, the 514 zone for now. Once we lose that trend line, then because we've been in such a nonstop uptrend, we had a small consolidation, had this next leg up, we must hold that zone. Let's go to Google, had better earnings than other tech companies. Still in this golden cross uptrend, broke out of that small consolidation, momentum to the upside, straight into good earnings. Now the bearish momentum on the RSI, bearish divergence, is forming on a daily chart. It's not ready to crash right now, but it's forming. We can see we're in the overbought zone. And once we're in the overbought zone, there's a higher chance that there's a pullback. It's not guaranteed. It's just the chances are higher. Greater than 50%, we could get a larger pullback probably in the next 6 months to 1 year. It will probably happen, this is just my opinion personally, not financial advice, when the AI investments start to show overspending and in a sense, the financial reports start to show some cracks and weakness. If the price is extremely high, then we'll start to see this pullback. So that's what we want to watch out for here. Tesla on the weekly chart, starting to approach this resistance area of 475. We had that rally uptrend. And I remember pointing this out on my videos back in September, saying we're going to get some small pullbacks, but the investors are going to keep holding and let it go up. That's exactly the price action I was talking about. Printing on the charts. So traders, usually indicators, using technical analysis, whatever time frame we're on, usually short-term traders like to just short these overbought zones. But investors who bought down here in the summertime, we're just holding on. They're just holding on. Symmetrical triangle breakout, hold on, hodl your positions. So in terms of having this double top, we broke to 2025 all-time highs. The next estimate could be 480. See if we get up there. If we pull back, it's normal for stock price action, because if we look at the larger, longer-term high, low, high, we should be making a higher low just for normal, healthy price action, so there's no capitulation crash in the price. So if we hold above 410 and 380, that's totally fine. 433 for the bulls to hold above. Let's do a couple more. Let's just do one more. Let's do AMD. Actually, I'm running out of time here. So AMD, we're still in this up cross and making higher highs and higher lows, straight into earnings. So if earnings are bad, we can pull back to about 250 to 232. Resistance 260, 275 in terms of that breakout potential, but it's already high. I remember looking at AMD in September, for all of September, saying, wait a second, we uptrended, pulled back, a little setup here. The stochastic got oversold below 25, starting to show some momentum. Then the squeeze started firing in late September, early October. RSI is rising, prices rising. Then we have the rally up. So Bitcoin, we're still rejecting down from the 50 EMA. The price is actually in a long-term consolidation. And what I want to watch out for is if this is going to be a head and shoulders, we cannot fall below $108,000 Bitcoin. That would be a problem. The bearish setup, if that happens, crypto could crash negative 10 to 15% to the downside, breaking us down below 100,000. I would still buy some down there. I'll buy some. Discount on Bitcoin? Yes, please. But we just don't want to be buying tops and then losing positions. For me, I like to enter into spots like golden upcross, 50-day moving average bounces. And if we do get the next 50-day, that'll be 101K Bitcoin zone. But right now, because it is Bitcoin and a lot of corporations are buying right now, we need to directly hold above 108,500 Bitcoin, because even though there's an ominous, scary looking head and shoulders, it could easily turn into a double top, double bottom, and then all cryptos could go green on a short squeeze. So that's something I want to watch out for. Ethereum USD, we are still in this downtrend right now. Low, lower, high, lower, low, lower, high, lower, low, lower, high. We're holding above the 3,700 range, resistance above 4,000. But we're still downtrending. This is not really that good. This is not really that good for Ethereum. Risk off. Meme stocks crashing, penny stocks crashing, Zcash pulled back. Macro news is not positive enough. If we're going down, I'm hands off. I'm waiting as a long. Let me forecast. I want the price to go to about 3,400. Then I'll buy. Because I know from experience that we'll get oversold in that zone. 3,400, 3,200, 3,000. That's where I want to buy some Ethereum. And when we're downtrending, the gains of the bounces are much, much smaller on this right side, compared to last summer on the left side over here, the gains were 50%, 100%. Now the bounces are only 10%, 20%, 15%. So we're only looking at 10 to 20% bounces right now in this market. If we crash, that's the only thing I'm estimating right now with Ethereum. XRP, we can see this one trade didn't work out for me. I had success on trading pump, which I'll show a little bit, but this is still downtrending. You can even see in the linear regression, this is angling down. So I want to make that 100% clear to people. Crypto is downtrending right now. We're not crashing, but we're not going up massively right now. We're downtrending. Lower low, lower high, lower low, lower high. So in this moment of time, as a crypto trader, I need to just be patient, let go of emotions. If you feel any FOMO, just meditation work, deep breathing, let it go. If I really need to do something with my hands and my mind, then paper trade or chart a lot, 10 times more than usual. That's my recommendation to people. Instead of trying to buy every single trade and losing as a bull, probably one short trade would work. Or if I'm a perma bull, I just wait for XRP to crash down to 210, which it probably will, $2, then play that little bounce, reversion to the mean, which would be the 10 to 20%. That's what I'm talking about. Solana, very similar. Even though we're golden crossed, look at this price action, right? Rocket goes up, rocket comes down. Now, the only thing that was getting me excited about Solana is that we're hovering around the 200 EMA zone, which is about 186. We're still symmetrical triangles, so it is not game over yet on crypto. Sim triangle after a downtrend. Thank goodness this is not a descending triangle, because that could be bad. But lower low, lower high, lower low. If we can hold this zone above 175, we'll try to get one more. I will know the uptrend is going to reverse when the support holds above 175. We break out to 200, retest 180, and then have a trend change on the daily. That's how we know we're going to go from low to reversal to uptrend. That's how we know. Go from low, establish the support level, and stop dropping. We go low to sideways, and then we have this uptrend reversal. That's what I'm waiting for. So I am not firing and buying every single trade that I see on the charts. I'm being very patient. It's tactical swing trading. All right, but I do want to point out, I don't like to show meme coins too much, but this is what Pump is like, the definitive meme coin. But this trade saved me because last 1 or 2 weeks, I saw this upside down head and shoulders and I played it. So while this went up, took my profit, and other altcoins kind of crashed back down. So that's the thing with crypto, is once we buy, have to have stop loss management and make sure I'm not going to lose the position for no reason as a crypto trader. Now, when I'm looking at this chart, this is what I'm seeing. It's kind of like this longer term consolidation. High, higher, low. It's okay. We need to hold above 4,000, but this is not even the greatest coin. What everyone's trading right now is Zcash. Zcash, one of the greatest privacy coins right now. Now, I did not show this too much on this video, but it did have a golden cross way back in September on Good News. That's where it had higher highs, higher lows. I did mention on this exact day, October 7 or 8, that there was a short-term double top, but if we happen to hold above the 118 level, maybe we could have a leg higher, and that's actually the first pullback, right? So then we keep going up here and pull back another leg up, which was a massive amount of 100%. So we have to control our FOMO right now. Have to control the FOMO because the indicators are saying danger, beware of high RSI, which is falling in the price, which is rising. That could show us bearish divergence. Candles are showing us shooting star, hanging man candle, bearish piercing candles to start off this day, which just started off 2 hours ago for me. So pulling back for now, the weekly chart, it's not completely over. We don't have some massive shooting star like we usually see, something like that. So I'm just anticipating we're going to pull back to one of the 12 EMA, 12 or 26 EMA on my chart, pull back to around 350, 315 or 290 and see if we could get another bounce. But if it's going to be a backside trade, which means if it's going to be the downtrending trade, the bounce will be smaller on the right side if I split this chart in half. If these are uptrending and it starts flipping over, if it starts downtrending, it could still be very hard to make any gains because if it has a small bounce and fails, then we're going to really crash. So I'm not super excited about Zcash. I'm actually more excited about Horizen. Now, Horizen is a very volatile privacy-related coin. It's just that sometimes on the weekly chart, when I found Horizen about 1 or 2 months ago, it's a very strong support level. I love those weekly chart plays. Strong level with momentum, big momentum. So because that momentum's still in play, the weekly squeeze just fired a couple weeks ago. And it's still in play, but it's not the perfect buy spot. I'm just saying that if we flip to Zcash and had a sort of similar setup, but it was uptrending more and went 1000%, which is why another reason to maybe get out of Zcash or just be careful about Zcash, not financial advice. But Horizen, you can see we still have this type of a lot of space here to run. That's why this is definitely on my watch list for the next 6 months to 1 year. If Horizen holds above, let's say, $10 to $12, about the 50% retrace from now, because yes, we hit that 200 EMA. Okay, get the initial pullbacks, pulling back. We have high, high, low, high, high, low. If we hold above 15, 12, and 10, and we don't crash back down to $6, that I think Horizen has a chance here. So I'm watching this. I'm not all in on this, but when Horizen goes, it could go up. Now, sometimes it goes 100%, 150. One time it went 500 and crashed back down. So right now we just went 150. So right now it's a little bit split. What I do like is the daily golden cross just started, and if you rewind to Zcash, I'm flipping back to another chart. Remember, what was the early sign of Zcash? Looks like that. Similar. Not exactly the same though, because Zen is very volatile. The bots try to kick everybody out here. And then we already had the pull, the pump up. So I'm hoping this is not the end. $20 Zen would be pretty sad. But it went bottom to top, already 200%. So let this thing pull back. That's what I'm looking for. Pull back. And if we ever retest 15, maybe I'm going to start getting interested, because if the EMA start to fan out, this might be the next runner. We'll see. Thanks for watching. Hope you learned something. If you like this video, go ahead and click subscribe, click the like button. Send this video to your friends, share, and I'll see you in the next video.